So we're looking for a slightly less hawkish FOMC decision, not necessarily a dovish one, which really was more closer to that, I have to admit. So we're looking for an upside move for the euro dollar. Our resistance was 731. The high was 746. So let's go and take a look where we stand now. See the market ease back a bit as bonds pulled back. So the area for resistance really is going to be this 758. This is the old 758 we talked about. God, now it's almost 2 months ago. If you remember, we talked about that area. Remember here, there was our 758. We took the dip and we went up here above 8. And this seems likely here, although I think they could punch it just a little bit higher. But this confluences with the 78% of this entire move. We'll take a look at that. You can see that right there. Got marked as 757. I'll move it up here to make it easier. 758. Just showing that. Now they've had a decent pullback, so if they can gun some stops up here, my guess is they'll probably come right up in here in this area here. So for today, we will have the resistance at 779, really all the way up here to 782. So we'll call it 782 for resistance here. I do think that we're going to go set new highs. We talked about that. Thinking the dollar can make a reasonable correction. We even went over a story yesterday with a report that's come out from Deutsche Bank, who had been very bearish the euro, and had they were looking, for the euro to go, somewhat lower, and they had flipped the script and changed their tune, and they were looking for a run to 108. With a possible squeeze to 110, at the end of this quarter. I think we'll get above that area here just for a decent dollar correction. Now, at that point, yeah, the dollar could be a buy, but I just think we have to correct back. And then you have to look at positioning. A lot of people were, not a lot, but some people were obviously on the wrong side. They were thinking we were going to get a very aggressive or hawkish type hike. So we're going to look here at this being 782, the upside resistance, where we would expect to see some, pushback. For the support, because we definitely didn't get that hawkish hike or that hawkish rhetoric, I guess you could refer to. For the support, and let's take a look here. And in here we have 663, 665, probably a tad bit low, but we're going to go and take a look at the 30-minute for a little bit closer area for support. So we got above the top of this range at 714. And actually I had some trouble with this initially, earlier in the session, right after the the FOMC actually during right after we got past the press conference. And we got above this, pushed them higher. Obviously, on the good news, Dutch election results. Good news if you're a Euroball. So we're going to go with support here. Support really is in this whole area here, coming all the way down to 670. There's at 69, 676. Take it right there and call that 672. It's a little bit of ways, and actually at 690 we have the 38%. But if we do get a little correction here, market gets a little bit tired. I think the 672, it's a little bit pushed away, about 50 pips away. But I think that if we do get the market to roll over to correct a bit, let's say the bond market makes a dip lower, then I think that'll be the area for them to go in and come in, which would be, 690 is at 38% of this entire move here. We'll take a look at that. You can see that coming in here, 690. The 673 would be the 50%, and we're looking, as I mentioned before, we're going to look at right here at 670. You see, it's a 73%. I tell you what, we'll go with this 50% right here because we've got a little cluster. Right in here. And then you've got some support coming right smack dab there in the center. Around 670. We're going to go with this 673. But you do have this little cluster here of price action. And we have to say now, I don't think you can call this a range anymore. We have to say on a very short-term basis, it'd be bullish. And let's go into the cable. We do have Bank of England rate decision in a little bit at the top of the hour. So we had resistance. The whole thing, we're looking for a dollar pullback. 23.01. Our high was 23.10. So let's take a look where we're at now. Resistance would have to come in obviously a little bit higher. We'd go with 23.37. Even though we have the bias pivot here, on a short-term basis, we're going to go with this 23.37. Somewhat tighter. I mean, you could almost mark this 23.62, but we're going to give it a little bit of space here. Obviously, if they got some short cover, we can really get scooting. The 23.62 makes the most sense on this bias pivot, but we're going to go right there, 23.37. Keep it fairly tight. I'm going to say this is still bearish. I don't think you can even say it's a range yet. And for support, right there at 21.82 for support. Right here. And let's take a look where we stand here. 2338 would be the 38%, which comes in with that 2337 we're looking at. So let's mark this off. So that confluences with that level of support we're looking at. And let's go move into the Aussie dollar. This one had a pretty good move up in here. Because even on the upside, we kept it relatively tight, but it was, it was so oversold, it really made a run up here. And we had 76.60 and it got way past that on this one. But there was a lot of, this market had been under pressure for quite some time, so we had a nice ramp. We're going to have to go and change this to range for right now. No longer considered necessarily bearish on a short-term basis. And let's take a look what we have. Resistance. Resistance is going to be this old 77.31. So that will be the 77.31. We're going to keep that for right now. Obviously, they made a pretty good run up here, but we're going to keep the 77.31, the top of the zone for resistance. We could push it hard, but let's leave it there for right now. Pretty tight overall. They did have a pretty nice run overnight. We flipped it over to range now on a short-term basis. And let's go and take a look for support. And we'll go to 76.39. Then we'll move on to the Kiwi. And we had 70.18 and 68.73. Just like the Aussie, it did push, but not as far well above the resistance, but it certainly did. This market's still going to remain bearish. Resistance will come in right there, 70.64, right before that 38%. You can see that coming in right there in that low close here. So it's going to be that 76.64. For support, right there at 69.39. And we'll move now into the dollar CAD. Amanda says, good morning. I sold 70.26 and 77.04 Kiwi and odd last night, thanks to your bias. Thank you. Thanks. Oh, appreciate that, Amanda. Thank you kindly. Appreciate the kind words. Or kind thoughts, I should say. So let's go and take a look where we are on the dollar CAD. So we came into this 38%. We're talking about 33.53, and we definitely got, I don't know, this must have been a mistake here then, right here. I don't know what I got there. Oh, 35.50, okay. 33, so we got well below that. Obviously, with the dollar pushing lower, we got that, what some people are characterizing as a dovish rate hike. I don't know if it was necessarily dovish, although I guess if you compare it to how hawkish some people were, you could say dovish. I just think it was I would give it, well, definitely, I wouldn't even say it was mildly hawkish. It was just wasn't. But it really wasn't anything we would have expected differently from Yellen. So, but let's go on and take a look where we stand here with the dollar CAD. So we came down here to this 38%. Let's go and mark this off here. And 32.51 will be the 50%. I'll mark that off. I have these prepped and ready.
When we take another move lower, we'll have an idea what we think the market can potentially get to. So for support, there's a 32.57, 32.51 is a 50%, so let's just call it even 32.50. And for resistance, we're going to call it right there, 33.74. We'll push it a little bit higher, 33.80, 33.81. So the Bank of England rate decision is at the top of the hour. We'll be back to go on and cover that. And thank y'all for joining us here on the Morning Edge webinar.